Hi, my name is Cameron. Welcome to my channel. Today we're going to take a deep dive into Bitcoin and understand why this bull run's got plenty more in it. Let's get into the charts. So to first understand where Bitcoin's going, we need to have a look at the legacy market. So what we're first going to do is we're going to have a look at the SP 500. Then I'm going to take a look at the DXY, which is the US dollar index. And then I'm going to take a look at Bitcoin, which essentially drives the entire cryptocurrency market. So you can see the S&P 500. So the S&P 500 index is at 527750 as of today. So these are monthly charts. So I've got the 200 exponential week moving average across the bottom, which just gives us an indicator of some of the areas that we can retest. So what I'm looking at here is I'm looking at to try and find some structure to this using Elliott wave. So Elliott wave, depending on which direction we're going in, traditionally forms a 5-wave structure. And with Elliott wave, there's various ways you can determine the wave. So, and in hindsight, when you look at the end of a cycle, you can usually see where the waves are and if they make more sense. So what we're looking at is with Elliott wave is a 5-wave structure. So wave 1, 2, 3, 4, and 5. 5-wave structure up, and then and there's usually a corrective wave after the 5th wave, which is like an ABC down. So what I'm thinking is with the US economy and a lot of other economic metrics, my belief is that we're going to top out and essentially come into some form of recession after a blow off top, right? So the way I've come to that conclusion is, and whether this is perfect or not, that's to be debated. But if we look at like potentially a 5-wave structure looking like this, like starting at this COVID area, the COVID lows, as being this sort of like the 2nd wave, and then this as a sort of the 5th wave structure. And I could be wrong about this. We could be in a 3rd or 4th wave, depending on where we are in the cycle. But I like, my view is, based on a lot of metrics, is that we're going to have a major corrective wave down at some point. So, and I don't think that we're there yet. So if you look at the S&P 500, some areas to watch might be, this previous top here. It is possible that we could potentially come back and retest this area and then bounce higher. We don't have to though, so I wouldn't count on it. But it is an election year, so we could potentially test this top here and then make another run for the high side, which is would be healthy. The fact that there's a small amount of profitable companies in a lot of these indexes that are actually driving it, it's debatable whether this is just fueled based on nothing. I mean, if you think cryptocurrencies are a scam, legacy markets are the biggest scam. So what I'm thinking here is we're going to make a final blow off top of a 5th wave structure. Now, what's that going to look like? I mean, so if we look at this last peak down to this low, we could potentially be looking at maybe around about this 6,800, 7,000 level. So I would think that, like, even out of this move here, we could get up to this 1618, which is 5,600. Maybe we have a pullback from there or consolidate to move higher. It's a really interesting level that we're at now, is because traditionally you can stall at a 1618 at 1618 level, and or the 2618, which is if you look at this COVID drop here, we're at the 2618 of that move. So it does mark a significant level for us to either consolidate, maybe we retrace and retest this high and then move higher, or we could just make another run on that one. So, but yeah, I mean, I wouldn't be surprised if we do get into this, this 6.5. So what I'll do is I'll put a box here to say this is right where I think the market between like 7,000 and more like 6.5. Let's say 6.5. More like this sort of area here. I would see us like hitting this fifth wave up. So there's a lot of other metrics I won't go into now why I think that we are in this last wave. So this is just my opinion, but if the legacy markets are in this fifth blow off top wave, then that's gonna be, this is really bullish for Bitcoin. Let's take a look at the DXY. So with the DXY, like some of these legacy products, like the US dollar, etc., you really got to go out onto higher time frames. So this is a 6 month chart. So we've really been, way back since 2008. We've been in this channel. We haven't broken out of it. I mean, you can see, we've had this, we've had this pullback, and then we've rallied to the top of the channel. Then we've sort of, we've broken to the bottom. We haven't been able to make it above that sort of that 50, that mid range. And then, when we sort of break above, then we sort of pull back at some point, we retest the bottom of the channel, then we move up. So one of the things to point out here is in this last 6 month, this 6 month region here, we've printed this this spinning top candle, which higher time frames like this, you need to take them with a grain of salt. But for me, there's a lot of selling off here. So I wouldn't be surprised if we start to retest the lows here at some point, and it'd be debatable whether we actually get above this point here before we start to test the lows, like the bottom part of this ascending line here. If we break below it, if we do something like this, which would play out over a period of time, we sort of, retest this and we break below this level and then maybe come up and retest it, I would think that, we could be looking at significantly lower levels, and it would mark, like a considerable pullback with the US dollar index. With some of the things that are happening with, with global economics, with Russia, China, gold, silver, it makes a lot of sense that a lot of countries move away from the US dollar, and they, instead of using the USD as reserve, that they start moving more to metal. So if that is the case, it could put quite a bit of pressure on the USD and the DXY, and then push it lower. So I'm bearish long term on the DXY. So like outside of, I'm not saying it's completely over. I mean, it could be, but I would think that we would consolidate down at some point. It could take a long time to do that, but we at least stay within the lower half of this channel, and then we've really got to get below sort of this point here for it to be lights out for the USD for a while. But given where they are in their economic cycle, I think it's entirely possible in the next year or so that we break below this this line here. So another thing, so let's get into Bitcoin. So, and I want to spend a little bit of time here and just talk about where market structure and cycles. So with Bitcoin, there's really two charts I want to look at here. We've got regular and we've got logarithmic. So if we look at the logarithmic view, it'll give us an understanding of the market cycles and the structure of, to understand where we are in a macro move, like a larger time frame move. So this is a monthly time frame. This is a monthly time frame here. What we want to do is we want to understand out of these larger moves, where are we in the cycle? So we can look at past history cycles, and then we're going to look at where we could potentially be going in this cycle to see, what the next move is. So what I've done here, I've got this little indicator which indicates the halving. So with Bitcoin, in the code, and I won't go into mining, I won't go into halvings, but essentially every 4 years, Bitcoin goes through a halving cycle, which is the block rewards for miners halve, which it reduces the amount of supply in the market, and then price apparently is relative to these moves. So and there's a lot of other factors in this, but so what traditionally happens is at the bottom of a cycle is like we have a rally up, we reach a blow off top, and then we retrace to a certain point. We rally up, and partway through the cycle there's a halving, and then we have a blow off top, and every cycle seems to be the same structure where we're constantly edging up in price. So we're in this ebb and flow in an upward direction. So a couple of things with structure I want to point out with logarithmic charts. So if we look at the previous cycles, I'm going to find this indicator here. Where is it? So let's have a look at the bottom of a cycle to the top, right? So if you got in here in November 11 at the bottom of this area, and like Bitcoin did trade below this, but there's not a lot of data on that. So let's just say this is the bottom of the cycle. There's a 51,000% return from the bottom of the market to the top of this, if we call this this the cycle. Similar here, we've got a return of just under 12,000%. This one here, bottom of the market to the top, you've got 2,000% return. So what this is showing us that that there's a theory that we're gonna get diminishing losses and diminishing returns, and I am a prescriber to this this theory, simply because if we look at this, we've got a 56,000, 12,000, I'll just round them up, and 2,000% return. Like the percentage returns on price are reducing. So it would be realistic to say in this cycle, we won't go up to have a 2,000% return or more percent return in this cycle. So a lot of people are calling for $3,000 Bitcoin, $100,000 Bitcoin. It's possible. I'm not saying it's not going to go there. There's some other factors that we'll talk about in a minute that may see us get to that level. If you're looking at history and we're prescribing to diminishing losses and returns, then we need to take into account the fact that we might not get to that level or even close to that level. I mean, we took a considerable drawdown in percentage between these two cycles, or these three cycles. So, have we topped out at the 400% from the bottom to the top of the market? It is possible looking at this, but I don't think so. Some of the other things that I just want to talk about are the retracements between cycles. So if we look at we this first cycle here, we have we reach this blow off top, and then we retrace down to the bottom of the market. We've got an 85% retracement from the top to the bottom. So that's quite a drawdown if you're looking at comparing it to legacy markets. An 80% drawdown in an asset class that you're invested in is a considerable drawdown. So same with this. The next cycle we went from 85, then 83, and then in this last cycle, a lot of people are calling for quite a low price on Bitcoin, but the cycle low, it's around about 75%. So we only retrace 75. So diminishing returns in percentage and diminishing losses in percentage does have a lot going for it, as in we are essentially forming that structure. So So I think something to be mindful of is whatever the peak is in this cycle, like where are we going to retrace to, and are we going to retrace back to the same percentage lows as previous cycles? Now, I do think that the institutions having arrived with ETFs, so some ETFs have been approved in this cycle that have changed the structure of the way Bitcoin works, and I'll show you why. If we look at these, if we look at the halvings, we've never broken an all-time high post-halving. So if we look at this cycle 2, then we've got a blow off top. We reach the bottom of the market, and as we rally, the price hasn't gone above the last cycle high. Same with this one, come down, and then like post halving, we still haven't broken above the high. Now, in this cycle, we broke above it, and the reason, the mainstream narrative for this would be that the institutions are here, and that now the structure has potentially changed because we've either reached the top of the market, or this is the peak. But before the halving, we've actually gone and closed above previous cycle highs. So I don't think that's the case. I do think that the market over time is maturing, and as we see more investment coming into the market, because to move a $67,000 Bitcoin, $50,000, $100,000, $200,000 Bitcoin, you need big money and institutions to play in that space, and they're the drivers for this. They're the catalyst for this. So I would see that this here is just maturity of the market. But I think we need to be conscious of the fact that we've gone through previous cycle structures with retracements, percentages, and diminishing losses, diminishing returns. But we need to be conscious of the fact that the market structure could change here because we've got institutions here and there's other things at play. The market cycles may not move the same way that they have. Now, I have thought this, in previous cycles, and if you have that thought, you can always get caught out by holding through cycles. But I think it's something to be mindful of, the fact that we are going to start trading with volatility, but the market may not move in the same structure as it has previously. So I'll get into some other metrics, which are some regular charts. Just have a look at some structure on some high time frames and some lower time frames, just to see where we are in this cycle, just to see where potentially we could go moving forward. So this is the monthly time frame on a regular view. So what I like about this structure is we are still above these previous cycle higher time frame closes. And we've retested them, which is a really nice structure to see. Wyckoff is an interesting trading modality. It was a gentleman from the early 1900s, I believe, who developed market cycle structures. And if we use Wyckoff structure, this would be a sign of strength, where essentially we've consolidated, we've had this accumulation range, and then we've moved up in price. We've marked up in price here, and now we're retesting this, which is, it's called an SOS, a sign of strength. So there's a couple of things that could be at play here, which is when we rallied in the last cycle, when you sort of get to these sort of peaks, the market distributes where people that bought at the lows, they've made their gains. They need to offload their profits into the market. And that's called distribution, where essentially the price distributes and the money and liquidity flows into the market. And there's not enough capital, or not enough buyers versus sellers, where all the sellers sell off and the market crashes. And then we enter this sort of, so we go from a distribution we're distributing, and then we go into an accumulation range. So this would be distribution and then accumulation of these areas. So, and really, we're forming like a head and shoulder structure to the downside, and then this is like the final push lower, accumulation, and then where we push up in price, we mark up from these lows, and then the question is, where we are now, are we in a phase called reaccumulation, where the market's pushed up in price? Some of the buyers at these lower prices are now realizing profits, but there's more buyers and more interest in the market. So are we going to make another leg higher and push into that next phase? I do believe that is where we are in the market cycle at the moment. So let's take a quick look at some Elliott wave structures before we get into some lower time frames. So what we could be seeing is this sort of 5-wave structure, which could be playing out like this. So we've got our first impulsive wave, second impulsive wave, and then we're in this final impulsive wave here to the high side, which could play out over the rest of this calendar year. So, and I would put this move based on a Fibonacci retracement from the last cycle. I'd put this move up at around about this 1618 Fibonacci level as a conservative price point at this level. So like, are we going to get to this level? It's possible. I can't guarantee that we will, but we could do something like this, where we see the market sort of get up around here at some point. We're going into this will be trading into next year at that point. But we could do something like this, where could be doing something like this, where we sort of we chop around here, and then we sort of break higher into various levels, but then essentially we just sort of get up into this, and then we sort of and that's the cycle top. Or we are part of a larger structure where the market is going to move higher, where this would be phase 1, 2, 3, 4, and then 5 is something like this, where we're basically up around this like 150, 160 mark, which if you look at previous cycle highs, it's not unachievable. Like last cycle we got into this 2618, 3618, and then we sort of peaked around this 4236. A 4236 of this level would be up around 250,000, but essentially that would be a 1200% return, which if we look at the previous cycles, it is still a diminishing return, is possible, but I wouldn't count on that personally. I would be a little bit more conservative. I want to see where the market's going, but I'd be looking at some of these lower Fibonacci levels, which would be around about your 2618 and your 1618, just to be conservative. We don't want to get caught in another cycle if we get one. So if we look at some of your smaller time frames, like if we look at a 3-day, Bitcoin's making a really nice head and shoulders pattern here, which I don't mind, which is something like this. So if we put a fib retracement on this, on these like lower time frame levels, of this range here from back to mid-March, we've got you got a 1618 up here at 84,000. So to me it looks like we are going to break out of this at some point, and it might not be for weeks, but we could sort of say it's something like this, or put an ascending line here. I would say at some point we're going to break out of this area and make a run for this 1618 as the next move. So I really like this 1618 because just of where it sits, and I like this. I like this head and shoulders that we've got going on here, which is head and shoulders pattern is something like this. So it's an inverse head and shoulders. So what we could see is the market do something like this. We could even go a little bit lower here, and just sort of make this. This is the head, and we've got the shoulders here. So and then what would happen is we sort of break above this and either retest this descending trend line, or maybe we retest this range high, and essentially we just sort of break above, retest, and then we would see that sort of 84,000. Now this 84,000 could be it could be this like the wave one of this cycle, and then we retrace back to, get rid of these, retrace back to something like 50,000 and then up like this. If we are going to make our way to $250,000 Bitcoin, I don't know if that's possible, but I keep an eye. Some of the things that I keep an eye on are these on-chain metrics. So I've got this indicator here, which is it's a pi cycle top indicator. So this indicator here is from a free site called checkonchain.com. Guy has some free business intelligence tools. They're free, you don't have to pay for them. This is a common indicator across many of these data sites. So there's a few of them. But yeah, this is just a free resource. You don't have to sign up for it. You basically just use their website. So as you can see, these orange beams here, they indicate the tops of the market. And then you've got these blue beams here, and they indicate the bottom. So if you were just to buy these blue beams and sell the orange beams, you're buying the bottoms and you're selling close to the top. So it's not a bad way to sort of see, like strategy, just to see where we are in the cycle. We haven't printed any orange beams, which makes me think that we are in continuing up in this sort of upward trend. Some of the things that we do is we retest this 111-day moving average, SMA. So we could come back and test this before we move higher. So just something to be mindful of, that we haven't printed any orange beams, and that we've really only sort of broken up once into this 350-day moving average channel, which makes me think that we might have a bit more in it. The other thing to keep in mind too are these ETF inflows. So it's not a bad idea to keep an eye on these. BlackRock, which is IBIT, they control the largest volume of Bitcoin in these ETFs. So Grayscale saw a huge drawdown, which was because of their higher fees. Ever since these ETFs were launched, we've seen a lot of the volume move out of Grayscale back into these. Is this a corporate play, and is this all of BlackRock's volume? Probably, who would know? But like what we've seen is huge amounts of inflow into the other ETFs. When the market started cooling off in this last range, we've started to see just a slowdown of inflow. We have seen an uptick here when we've seen a little bit of volume coming to the market. So we want to keep an eye on this. We want to see this volume, even around this volume level here. We really want to see this sort of continue on, and even picking up is even better. If we were to be in a reaccumulation phase. So I just wanted to point that out. So like to move this market up, we're going to need to see a huge influx of capital in these ETFs. I don't see us moving up from retail at any point, simply because retail just can't move Bitcoin at this price. They're my thoughts on the market structure. Hopefully you've got something out of this. Feel free to like or subscribe, and I will see you on the next one.